welcome guys. I know you want to make money when it comes to trading. Everybody wants to make money and everybody is chasing that one strategy that can make them the billions and the trillions. But hey, what you also need to understand is trading is just not about strategy. We have the technical analysis, we have the risk management aspect, and we also have the psychological aspect of trading. So in this video, I'm just going to talk about the psychology of trading, how you can improve on your psychology in order to become a profitable trader. So let's jump right into it. Trading psychology simply refers to a trader's state of mind whilst trading. There are three things to master if you want to become a professional trader, right? One is risk management, the second one is technical analysis, and the last one is the market psychology or trading psychology. That has to do with your mindset. Because trading is very emotional, right? Because it involves money. We are dealing with money. And nobody wants to lose money, right? Because if you lose money, it's very emotional. You don't want to work that much and then deposit in your trading account and then lose it all. Or you take a trade and then you just see your money running in a loss. It's very emotional. So how can you overcome all these things? The psychology of a trader can also determine whether you're going to be a very good trader or you're going to be a bad trader. So it's not just about having a good strategy or having a good risk management. If your psychology or your mindset is bad, it can affect your technical analysis. It can also affect your risk management plan. So the mindset is very necessary. Trading psychology is very distinctive to each trader because it is being influenced by their own emotions, right? So emotions could be happiness, becoming too happy after taking a win, or anger, right? Just become very angry after taking a loss, impatient, fear, overconfident. All these things has to do with your mindset. So I'll share with you some points that can lead to bad trading psychology, right? So the first one that I'll talk about is fear. A lot of traders become very fearful after taking consecutive losses in a row or after losing a very huge sum of money in the market. Losses are inevitable in the market. You can never eliminate losses in trading, right? Trading is a profit or loss business, so you can never eliminate losses, right? But one thing that we can do to manage our losses is by using proper risk management. If you have your risk management in place, that is, you are just risking a very small portion of your amount, there is no way you're going to be fearful after taking a loss because you know that, okay, you have $1,000 in your account. On each trade, you are risking 1%, right? So once the trade hits your stop loss, you know that you are just risking 1%, that is $10. So there is no reason for you to even be fearful, right? But if you are risking 50%, 60%, 70% on just a trade, then you become very fearful, you become very emotional because you know that once the trade hits stop loss, your account is gone, right? So to eliminate fear, you need to actually use proper risk management. You can never go against this rule. You have to always stick to your trading plan. Another point that I can also talk about is FOMO. That is the fear of missing out. A lot of traders do fear of missing out in certain setups. So they see a trade that they think that they want to get in, right? And then because of the fear of missing in that trade, maybe they get in too early or they get in too late, right? This is something that you don't want to be doing. You need to eliminate the fear of missing out. And the only way you can eliminate the fear of missing out is having a proper trading structure, right? You have a strategy that you are following. You know that you are only going to sell when price gets to the area of value. You are only going to sell when you see this type of candlestick, right? So when price is moving, you are not even scared because you know exactly what you are looking for. If you don't have a good strategy, if you don't know what you are looking for, then you become fearful because you don't even know what to do when price gets to this level. You just see price going up and then you just jump in because price is shooting up. You have no strategy or no approach to the market, right? So the fear of missing out can be treated by having a very good trading strategy and then respecting that strategy. So trading is a business that is really going to expose who you are as a person, right? So if you are an emotional person, maybe you easily get angry, you are fearful, or you are greedy, trading is just going to expose all these personalities about you. So once you get exposure of who you are, it's time for you to work on how you can actually solve these problems. Because without overcoming these psychological problems, there is no way you're going to stay profitable in the market. You can have a good strategy, you can have a very good risk management plan, but if your mindset, if your psychology is not on point, there is no single way you're going to make money in the market. One thing that people also do is they like to change strategies. You have to always stick with one strategy. This is also a psychological game, right? So they're just going to learn a strategy, they start trading, take one trade, second trade, and then it goes into a loss, right? And then they start thinking, no, maybe I need to change my strategy. They change their strategy, switch to another one. They start trading, losses, they have to change it again. So they keep on changing strategies. I'm gonna tell you, there is no strategy out there that is 100% accurate. Every strategy has some downsides and also some positive sides, right? You have to just stick with one strategy, master that strategy. Just imagine you get married to this lady, you divorce, you get married to another lady, you divorce, you get married to another. Like, how are you even gonna grow as a person, right? How can you develop your love life? How can you develop your marital life? Because you are not sticking to one person, right? Nobody out there is perfect. So you cannot go out there looking for that perfect one. No, you have to stick with that one person and then just grow step by step with that person, right? That is the same thing that you have to apply with trading. You have to stick with one strategy. There's no need for you to be changing strategies after some losses. You can just tweak them by learning or improving on them, but there is no need for you to be just changing strategies. Once you start changing strategies, it plays with your psychology. You will never settle for anything, because your mind will always be telling you that there is something out there that you need to find. There is a holy grail that you need to find. There is a key that you need to find. You are missing something, but you already have the key, right? What you have to fix is your mindset. Another thing that you can also experience in trading is anger, right? That anger that comes upon you whenever you take a loss, right? So this has to also do with your mindset. A lot of people just become so angry after taking a loss. As I said, you can cut down the anger by using proper risk management. Because if you know that, okay, I'm just risking 1%, there's no need for you to be angry, because you know what you are risking and you know the amount that you are risking, right? So if you become very angry, what happens is people turn out to revenge the market. Revenge the market means they try to fight the market back just to get the money that they lost in the market, right? So it leads to revenge trading, right? And this also leads to you trading with your emotions, because in this state of mind, you are not trading logically. You are not going to follow your trading rules. You are not going to follow your trading strategy. You are just going to fight the market trying to get your money back because you lost the trade. And once you start doing that, that has to do with your emotions. You are trading with anger. And this will even worsen your case. Once you start revenging the market, trust me, you're gonna lose all your money. That is why it's always good to have a trading plan, right? So your trading plan is saying, once you take the first loss, the second loss, you are done for the day. Close your laptop, go out there, just do something else. Don't stay on your chart, right? Because once you stay on your chart, you know that you are gonna fight the market to get your money back. So you just close your laptop, just put your phone away, just close the trading application, go out there, do something else. You can go out there with friends, you can go and swim, go to the gym, just do something that has nothing to do with the market. That is how you can help yourself. Another thing that you also have to take into consideration is by looking at the bigger picture. Don't just look at how much you want to make in a day, how much you want to make in a week. Just look at the bigger picture. Personally, I have 4 quarters, right? So January, February, March, that is 1 quarter. April, May, June, that is another quarter, right? So like that to December, we have 4 quarters in a year. So how am I assessing myself? I'm looking at my performance based on the quarters, right? So I'll check how much did I make in the first quarter. January, February, March, how was my results? I'm looking at a bigger time frame. I'm not just focusing on how much I made today, how much I made tomorrow. Because once you start doing that, once you start thinking about the shorter time frames, it will start playing with your mind, right? Because let's just say you take a trade today and then you lose that trade. In your mind, you are just feeling like, oh my God, I just lost a trade yesterday, right? So I'm no good. Today, I'm not gonna make any money. Or that fear or that loss that you took yesterday is gonna affect you today. But if you are thinking about quarter, right? I'm thinking about January, February, March. That is when I will assess myself. Even if the first month doesn't go well, I know that I still have 2 months to cover to assess myself. I'm not just gonna look at a day or a week to define my trading results, right? So this is how to think as a trader. You need to always look at the bigger picture.